I'm Andrea Morgan from the Office of Economic Development. I work in the housing division. I make loans for affordable homes. I'd like to welcome you. If you weren't here already this morning, I'd like to welcome you. And if you were here already this morning, I'd like to welcome you back. I hope everybody got a snack. And we will be having just a couple of housekeeping things. We will be having lunch at 1 o'clock. There's a short break in between when we leave here and when we have lunch. When we leave for lunch, you can go straight through this door and straight on in to the lunch, to the ballroom. You don't need to go back out into the foyer. For the Spanish speakers in the audience, the breakout is being translated from English to Spanish. Spanish speakers are invited to ask questions. I'll have the microphone at the end of the breakout or at the question and answer time, and I'll bring it around to you. We'd like you to use the microphone because this is being captured on video, and if you don't speak into the microphone, we won't be able to hear your question. And I just want to say again, a big thank you to all our speakers and our moderators and to our sponsors. We couldn't have done this without everybody's help. And with that, I'd like to introduce our moderator for this second panel. Jane Harrington is the Executive Director of the Colorado Community Land Trust. She's worked in the affordable housing business in Colorado for more than 40 years. Since 2002, her main focus has been in the development, financing, and administration of affordable for-sale housing. Jane has worked with appreciation limited for-sale programs such as limited equity cooperatives, condominiums on leased land, various resort community deed restrictions, community land trusts, employer-assisted housing programs, and the Denver Inclusionary Housing Ordinance. Jane, thanks so much for being here with us today.
Thank you. I think the second half of the panel is going to be very interesting. Today, earlier this morning, we learned about what it takes to get these units developed from Susan and others. And so now we're going to talk a little bit about the first half of our panel. We're going to learn about homebuyer counseling and mortgages. You don't have a good homeownership program unless you've got educated buyers who understand what they're getting into and good mortgages for them to get. So we'll start with Cece. Sure. Who's with NewSed.
Okay, so NewSed has a full menu of housing counseling services. We do pre-purchase housing counseling and post-purchase housing counseling. We're located here in Denver. We're one of dozen nonprofit organizations that provide housing counseling. We have several here in the audience: Denver Housing Authority, Colorado Housing Assistance Corporation, and many others. There is a housing counseling for almost every region, Aurora Housing, Adams County, Douglas County. So there are a lot of resources out there for clients. As a housing counseling agency, we provide education and then hands-on with clients looking to buy a house. What we do is, first, the ideal situation is to send them to a homebuyer class. We have those sponsored through Colorado Housing and Finance Authority. Every organization teaches those classes once, twice, or even 6 times a month. And so they're offered through all the Denver metro area and even other rural parts of Colorado. Those classes are free, and they're a good start for clients to find out what it takes to be a homeowner. If they want to continue the process, then we set up a one-on-one session with them in which we review their income and find out their income qualification. A lot of the programs right now in the Denver metro area are for people under 80% AMI. So it's really important to establish where they are, what they can buy, and then in addition to that, we look further into their credit report. We want to make sure that there's no issues once they meet with the lender to qualify for a mortgage. Once that is detailed, we look at their budget to make sure that not only based on paper, right? It's really important to know that when a homeowner comes, a lender looks at their gross income, but we also look at their net income to make sure that the mortgage that they're looking to qualify is affordable to them and to their household. So we look at their budget, we sit down with them, make sure that everything's in line, and then we move forward and give them a referral list for lenders and realtors. Once that's taken care of, hopefully right now it's tricky, but they're ready to look for a property. Right now, that's the biggest struggle right here in Denver. Right now, there's about 6 properties in Denver, and they're about 300,000. And so it's a big problem. With that challenge, we do have down payment assistance available. Right now, Newstead has a program from Wells Fargo, and we provide up to $6,500 for down payment assistance. That program can be used for conventional loans as down payment assistance, and for FHAs, it can be for closing cost. In combination with other nonprofit funding, like CHAC, for example, they can cover the down payment assistance, and then we will do the closing cost. So the client can get eventually about $16,000 of down payment assistance. Some of these loans have payments and interest. Some of them are due on sale or transfer. Newstead just recently launched a program. It's called Lending Circles, and on your tables you have a flyer about the program. This is another way that we're helping individuals leverage their funds to be able to purchase. Everybody's process is different. Sometimes it takes 30 to 60 days to get a homeowner ready and to closing table. Sometimes it takes 2 years or even longer. This program here, it comes from California, from Hsa Asset Fund. It's a lending circle. They're known by tandas. So basically what it is a group of people get together and start saving month to month. And each one will get the benefit of that savings. Everybody will get it 1 month, depending on how many people there are. We take up to 12 people, and basically what they do is they save from $50 to $200. At the end of their cycle, they get the money, and in addition to that, they get this gets reported on their credit report. We've seen a gentleman that had no credit when they started the program. 6 months after, we pulled it, and he was at 620. This program is reported through all 3 credit bureaus, and so again, it's in addition, it can be combined with our down payment assistance and other down payment assistance programs out there. Right now, there's Adams County, City of Aurora, CHAC, Jefferson County. They all have funding available for down payment assistance, but it's really important that the client finds out where they want to buy and meet with the agencies in that area accordingly to make sure that they benefit from the programs. With that, I'll pass it on to Stacy.
Stacy is the branch manager for Wells Fargo. Oh, Stacy is the branch manager for Wells. Is that working?
Yep, a little closer.
Pull it.
There we go. So Stacy King is the branch manager for Wells Fargo. She's been in the business for 18 years and with Wells Fargo since 2007. She's also with the Denver Metro Realtors Association, Aurora, and Aurora Association Realtors, and the Colorado Association of Hispanic Real Estate Professionals. Wells is very active in the affordable lending business, and I'll turn it over to her.
Thank you, Jane. Good morning. So 2 things I will talk about here. One, I know having a loan that can help more people get into homes is very important, where they don't need 20% down. So Wells Fargo last year came out with a loan that is exclusive to us, conventional financing with 3% down, to be able to help more people get into homes. We have some expanded guidelines on it to where things that we couldn't do in the past, we can do with this loan. And what I mean by that is we're able to use some sources of income that are a little bit outside of the box with this loan that we hadn't been able to use in the past. So thinking outside of the box a little bit by still making sure that this loan is helping to help people. Our goal is to do sustainable homeownership. This loan program goes down to a 620 FICO credit score, and we offer incentive. We very much believe in homebuyer education and partnering with the people like Cece and her organization, or giving them the option to do it online if they're not able to do it in person. But if they choose to do a homebuyer education class, we incentivize it by giving them, as of June 1st, $750 towards their closing cost. That's how much we believe in homebuyer education. This program doesn't have any income limits, and it's not limited to first-time homebuyers. So again, opening up the parameters to be able to serve more customers was our goal with this program. In homebuyer education, another program that we have is called My Home Roadmap. So for customers who maybe aren't ready right now, they know that they want to get on the path to home ownership. Maybe, like Cece said, a lot of times it takes a couple of years, but we want to do what we can to help make sure they're on the right path. So we can enroll them in a program called My Home Roadmap. There's no cost, nor are there any ties to Wells Fargo at the end of the program if they choose to look at options outside of Wells Fargo for financing. So this program offers up to 4 sessions of personalized financial coaching. Those sessions go deep dive into things such as budget review, action plan for savings, talking about managing cost of homeownership once they are in the home. And then in addition to those 4 sessions with a member from the National Foundation of Credit Counseling, we'll also send them, if they'd like, emails with pertinent topics to homeownership over a 2-year time frame to make sure that we're keeping in front of them and trying to help them stay on that path to homeownership. So that's all. Thank you.
Thank you, Stacy. Our third speaker on the lending homebuyer education side is Eric Knorr. He's got over 22 years experience in the mortgage lending industry. 2016, he joined Freddie Mac as Director of Affordable Lending, which is really exciting, I think. He's focusing on expanding and strengthening relationships with the housing finance authorities around agencies throughout the country. I'm excited because there's always room for a secondary market for home buyer loans.
Great, thank you. Can everyone hear me? Okay. So as was mentioned, I joined Freddie Mac in 2016. Prior to that, I worked for the New Mexico Mortgage Finance Authority, which is a housing finance agency in New Mexico, and ran their homeownership program and housing counseling initiatives and a few other things. But when I came to Freddie Mac, it was because they expanded their affordable lending group to include what we call HFA engagement. So essentially we work, there's 3 of us throughout the country that work with housing finance agencies to help them deliver more affordable mortgages. We purchase mortgage loans. Essentially, Freddie Mac buys these loans from HFAs, but to expand that box for HFAs to have a tool in their toolbox to be able to offer affordable mortgages. So I thought I would just talk a little bit about HFAs. I'm not sure how much of an awareness is. Does everyone know what an HFA is, a housing finance agency? Nate over there should know because he works for one, so he didn't raise his hand. But all right, so I'll just give you a little background on what an HFA is. HFA stands for Housing Finance Agency. They're mostly quasi-governmental agencies. There's some governmental entities, but they're created to provide affordable home ownership in very specific regions. A lot of them were created in the 1970s, and a lot of them became state agencies first, and they're basically created to serve affordable housing needs in their state. One of the benefits of housing finance agencies is that they were able to issue a certain type of debt, raise money essentially to fund mortgage loans, and it was mortgage revenue bonds, and they were below market rates typically. So traditionally, HFAs up through 2008 really had the benefit of being able to provide below market rates for home buyers, and a lot of what you hear about first-time home buyer requirements came from that type of financing. You know, not owning a home for the last 3 years, being a first-time home buyer, which is the same thing, income limits, sales price, acquisition cost limits, all those types of things were really sort of generated through housing finance agencies. Very specific structure. I mean, they have to have board oversight. They have to have a very defined area in which they operate. A defined budgeting process. At Freddie Mac, we essentially created a list of things that we wanted to make sure that any business that we did with HFAs, they follow these guidelines. And there are some state ones, there are local ones. Colorado, that we work with 3 different HFAs in Colorado. Some of them are one's the state CHFA, and there's a couple others. The city of Denver actually has one, and also El Paso County. And we work with them in different ways. But I mean, they were created to address local need for housing and low to moderate income in those areas where the traditional mortgage market doesn't operate. So that's their whole mission. They're mission-driven organizations, and they're not really nonprofit. They don't pay taxes because they're government entities, but they have some special designations for down payment assistance, other things that I'll get into in just a second. And a lot of HFAs do lots of different things. Most of them operate homeownership programs, which I'm going to focus on. They also do multifamily, low-income housing tax credits are typically allocated through housing finance agencies. Home funds, CDBG funds, ESG, HOP, all these federal sources of funding for homeownership, homelessness, and all that typically will funnel through an HFA. But the bread and butter, I guess I should say, is how a lot of HFAs make money to fund other programs or provide subsidy through other programs is through their homeownership programs. And most are structured very similarly. They are really an aggregator of loans. So they buy loans from lenders that make them a specific way, and then they turn around and sell those to Freddie Mac, for instance. Typically, HFAs are really consumer-driven. They will set a mortgage rate. The lender doesn't have the option of deciding what rate the borrower gets. The HFA says this is the mortgage rate for the program. Of course, there's income limits. Sometimes there's restrictions for prior home ownership, not always. And then also they will cap the fees the lender can make, which sometimes is a good thing and a bad thing, and I won't get into why that is, but they basically say the home buyer, no matter where they go, which lender they go to, they're going to get the same deal for an HFA. And again, the HFA aggregates these, and that's sort of the benefit. And then the big piece today especially is down payment assistance. Most HFAs can't access the capital markets and get below market rate financing anymore after the crash. That type of financing just doesn't provide a good rate. So a lot of them just sell their loans on the secondary market. They operate like a mortgage bank, but they're a mortgage bank with a mission, which is a little different. But they offer down payment assistance. There's lots of sources, and I think others will talk about this. For down payment assistance, HFAs will typically, it could be a grant that they generate. It could be agency reserves that they have that they make loans. It could be federal sources, home funds, CDBG funds that they provide. But that's usually the benefit and the reason why home buyers go to HFAs to get a loan. Freddie Mac, the way we work with HFAs, and like I said, we were created about 2 years ago, the whole HFA group came together, but we really work with them through affordable mortgage products, and very similar to what Stacy said about the Wells Fargo product. In fact, I think they do sell some of that type of production to us, but we have a program called Hsa Advantage, which is a 3% down program for, doesn't have to be a first-time home buyer. It's 3% down, can be used with down payment assistance from any HFA. It doesn't have to be specifically any particular one. It's got no delivery fees, so typically a conventional loan, you'll pay fees when you deliver loans. That's waived for the HFA program. And also the mortgage insurance they pay is much less than they would pay in a standard conventional loan. So it's really built to be an affordable product. One of the things I'll mention really quickly that we're doing to try to support very low and low income purchases, because as everyone knows, it's difficult to get a home buyer, and that's 80% or below area median income. It's challenging. We are doing a pilot program with CHFA, Colorado Housing, where we purchase loans from them for borrowers at 50% area median income or less. And so we provide a subsidy to CHFA directly, and then they provide that to the borrower in the form of a discounted interest rate. I think it's between 3/8 and 0.5% below their regular rate. So test and learn thing, something we're trying with CHFA to see how it is accepted in the marketplace. And again, I mean, Freddie Mac's involvement, we're going to be here for the long haul, but it's really focused on helping affordable mortgage products for home buyers and working with the HFAs to make those deliverable. So, thank you.
Great. Thank you, Eric. We're going to hold all questions until after all the speakers have had their turn. Then it's going to be a free-for-all. So the earlier panel today, you learned about what developers need to do to deliver the affordable housing product. You just heard about the home buyer education and lending process for these home buyers. We're now going to touch on and hear from organizations that help people stay in their homes and some innovative approaches to help neighborhoods and communities develop and sustainable, affordable housing that people can be in for quite some time. Our first speaker is going to be Rene Martinez Stone. She's the director of the West Denver Renaissance Collaborative. She's working in that area where she's elevating underrepresented community members in the placemaking process, supporting business district leaders, and creating West Denver housing strategy with custom development solutions, homeowner options, tools aiming at minimizing displacement. She's worked on many Denver and metro infill redevelopment projects. She's got a Master in Planning, Urban Design, Revitalization Strategies, and Design-Focused Community Engagement for more than 20 years, and hopefully can speak better than I am at the moment. Ready?
All right, so I need to click, or should I just go up there? I got it. Okay, perfect. That's good. All right, good morning. Thank you for having me here. So I'm going to get started. This is a map which you probably can't see too well, and I'm going to refer to the West Denver Renaissance Collaborative as WDRC. It's an initiative of the City and County of Denver, the Housing Authority, and nonprofits focused on community development and housing. Our district includes 9 neighborhoods, and so roughly on that map up there to the north is just south of Sloan's Lake, 17th Avenue. On the west, Sheridan Boulevard, Mississippi on the south, and Calumet is the eastern boundary. Includes 9 neighborhoods, and I'm going to talk about our housing strategy, but I'm going to focus on ADUs and tandem homes, so it's useless to do that unless I cover specifically. When I say ADUs, I'm referring to accessory dwelling units, which is a smaller home that is secondary to a primary home. And so accessory dwelling unit is a smaller, supportive secondary unit. When I talk about tandem homes, it's a unit that is not, it's secondary, but it's also a primary unit. It can be sold. An ADU goes with the primary unit. A tandem home is a second unit on a lot. So in May of 2016, the Office of Economic Development really broached the topic of gentrification and what was happening within our neighborhoods throughout Denver. They made a call to really look at detailed strategies and analysis that would have meaningful impacts that were very specific to individual neighborhoods. So today I'm really going to focus on that unique opportunity of ADUs. We have a broader strategy that focuses on some of our multifamily within that strategy, but specifically the opportunity of ADUs within Denver to help keep homeowners in their homes, to build wealth for homeowners, to keep families within these neighborhoods, and really to minimize displacement. The map on the left is you might recognize from that OED study, so the neighborhoods that are purple were identified as vulnerable to displacement. We've done a significant amount of work in 2016 talking with the 9 neighborhoods and the residents and service providers within the neighborhood to understand their issues and how they approached housing. The pie chart, which you probably cannot read in blue, shows you that there's a lot of concern about housing, displacement. Once the homeowners exist, are we sustaining them in their home? Are we supporting them in a dynamic neighborhood where both demand and the market are creating pressures on those homeowners? So there's a lot of concern about that. There's a real desire to be stewards in terms of the solutions, and equitable access is a concern by far when it comes to both lending as well as being participants in the land planning, transportation planning, and the future planning for their neighborhood. We're really looking at people-focused solutions, and so I'll just describe. The West Denver Single Family Plus is the initiative that we will be utilizing to focus on homeowners in West Denver. It is the opportunity to focus on low-income homeowners and really look at the whole gamut of their needs. And so through some sustaining homeowner education forums that we'll be rolling out later in 2017, we will be talking with those owners. The primary takeaway for those is education. So the main way that we can avoid involuntary displacement is to have someone understand the dynamics that are going on in terms of the housing market, and to also understand their equity, their choices, and the opportunities that are tied with their land. In addition to just the educational piece, our goal will be to focus on, there's a high instance of high-risk mortgages throughout West Denver, so we'll have our mortgage partners at the table with us to address those issues, and we'll be looking at rehab with the rehab partners. Once we've identified some of the owners who are okay in terms of those primary sustaining homeowner factors, we'll be talking to homeowners about the opportunity to invest in their homes, in their property, as a means of staying in place. And that's where the ADU and tandem home program would come into play. We would look at their eligibility. We'd have a whole comprehensive program and partners. And at play of this is many city partners, as well as nonprofit partners and for-profit partners in the program that we would provide for these individual owners, taking them from start to finish through that process. So why in West Denver? Why is this a pilot program that we believe needs to be refined and have proof of concept here? The first reason is that this is a map from 2007 of foreclosures. There's a lot of history here in terms of homeowners losing their homes. It's a history that informs even what's going on right now. And so we're advocating for this area in need of impact as well as having change. A quick snapshot of what exists there: 24,000 households. There's at least 6,000 owner-occupied households that are below 80% AMI. These are homeowners who, some of which are very secure, but as you move down the income spectrum, are very insecure. And there's a lot of instability happening within the neighborhood as demand grows and as the housing market catches up with other areas of Denver. You can see under that owner-occupied household number, 58% of homeowners are 80% AMI and lower. Citywide, that number's 30%. So we have almost twice as many low-income homeowners as other areas of the city. Our renters, 11,000. We have 78%, they're 80% AMI. We've also been tracking the market to look at what's happening specifically within each neighborhood. And as you can imagine, we're sad to report that it's a very small and shrinking percentage of those renters who will be able to buy a home within West Denver. And that includes existing homeowners, where part of that education comes in is if they're being offered a certain value for their home, are you able to stay in the neighborhood? Are you able to stay nearby the neighborhood where your kids can go to school? In addition, there's really good geography for this program, so it's custom specifically to what's happening. Of the parcels in West Denver, almost 90% are single-family home structures. So you have very few parcels and very few developments that are multifamily. So while we will focus on that, that is not where you're gonna have a big income on the affordability in this neighborhood. In addition, there's areas where the average lot size is 10,000 square feet. We have large lots, we have lots of alleys, so the physicality really supports that. We've looked at where zoning does exist for ADU and tandem homes. We estimate we could build 5,000 to 6,000 of them, and 1,200 are easy no-brainers move forward. So how do we do this? This is not a new idea, but you will probably be surprised to understand that ADUs are not, they're very underutilized in the city and county of Denver. So as of last year, over a 6-year period, there were only 79 ADUs built in the city and county of Denver. So very underutilized as we compare ourselves to other cities that are high growth cities and have proven that this is a tool to really benefit specific neighborhoods. That I see as an opportunity. That gives us the window to not just do something as mundane as creating more ADUs and making them more feasible. The specific opportunity is for us to say, let's bring ADUs on board and make them a tool of affordability and stability and equitable access for these owners who have not been able to access ADUs as a tool. And why is that? I mean, in a conversation with the mayor, I specifically said, well, ADUs are a product of the privileged, and I really believe that they are in the city and county of Denver. So they have not been a tool that can be used in this capacity to help stabilize owners who are in a home that we'd like to keep there so we don't end up having even bigger numbers in terms of affordable units that are needed across the city. The program, we're building on a bunch of new ideas to formulate the specific program, and we have many partners. The tabs that you see here are the mini teams that are forming to pull together this program. So we'll be focusing on education component and those partners, making sure we can meet all gamuts of affordability when it comes to owners who have equity and really want to stay in the neighborhood. Development review. Certainly building an ADU is a custom approval process just because there haven't been many that have been approved or separately approved through CPT. Design is going to be something that we're already approaching. Financing, there have been an abundance of financing partners who have really put this together to show that we have the ability to finance the owners who are interested and willing to go down this path. Building, that's a custom build as well. And so we'll be tackling that issue in all these gamuts to make it much easier for someone to have a design set approved fairly quickly, get financing, and move forward and be supported as a new landlord of a unit within the neighborhood. We estimate, we're putting this program together right now, it looks like it's going to be about $15 million to sustain about 250 units that we aim to build over 5 years. 15 million might seem like a lot, but I would call your attention to the typical tax credit project is about $15 to $17 million and would build anywhere from 65 to 85 units. Our goal is to build at least 3 times that. So we're really focusing on those affordability and equitable access elements of the program. So I'll be happy to answer more questions in Q&A. Thanks.
Our final speaker on this panel is Beth Thornton. She's the Director of Capacity Building for Grounded Solutions Network. If those of you have never been to their website, I highly recommend it. It's a great trade organization for us community land trusts and deed restricted programs. Terrific resource. And she's going to talk a little bit about how community land trusts can sustain permanent affordability.
Thanks, Jane. Is my mic working? The light isn't on, but it sounds like. Okay, great. So as Jane said, my name is Beth Thornton. I'm from Grounded Solutions Network. I'm a little bit different from my co-panelists because I work nationally, though I live here in Colorado. And we do quite a bit, but what we're really focused on is how do we create communities that are inclusive and vibrant right now and make sure that they are inclusive and vibrant forever. So we really take a long-term vision into the future. One of the key ways that we do that is through community land trusts. So there are probably as many types of community land trusts as there are colors in the Crayola crayon box. So I'm not going to get into all of the variations. I'm going to talk about the classic community land trust. And really, at the center of the classic community land trust is this belief that we can shift power to be more just. That there is a lot of power in ownership of land, which right now stands in individual hands. And we ask the question of what would happen if we shifted that to collective community ownership? What if communities had more control over the land in their communities and therefore more control over development and more control over their future now and for years to come? So that's really the central tenet of the community land trust. The way that that happens is community land trusts acquire, own and steward land permanently for the collective good or for the common good. So community land trusts acquire land in any way that people do, right? They can buy it on the open market, they can receive land donations, they can partner with land banks and city agencies for below market rate purchases, but once it enters that community land trust portfolio, it's there forever. It is no longer on the market, it's gonna stay there in perpetuity. So oftentimes when people acquire land, they ask, what's the highest and best use of this property, right? And we answer that question from an economic standpoint. What is going to be the most revenue generating use of this piece of land? Community land trusts ask the same question, but they answer it from a community perspective. And so the answers could be, what does our community need? And what can we do to help make that happen? So the things that happen on top of community land trust land, housing, commercial spaces, libraries, boys and girls clubs, urban gardens, anything that can happen on land can happen on community land trust land. It's just made that those decisions are made by the community. The classic community land trust is generally a nonprofit organization that serves a defined geographic area, most typically a neighborhood, but it doesn't have to be a neighborhood. It could be a city or even beyond. The governance structure, it's a membership, it's a corporate membership organization, so there are dues-paying members who elect what we call a tripartite board of directors. So if you imagine a peace sign with 3 equal sections, that's the board structure. So 1/3 of the representatives are people who live or work or farm on community land trust land. The second are residents from that geographic service area, so broader community members. And the third we call technical experts. So they are people who have a stake in the organization, have skills to lend the board. But if you notice, 2/3 of that board of directors are community members. They're people living on land, and they're people living in that community. So that really leads us to 2 things. That the community land trust is community controlled. They have the majority of votes on that board of directors as elected by the members. And then the second is that the community land trust is serving more than just its direct beneficiaries, right? The community isn't represented just by people who live on land trust land. It's by the whole community. The mission of the land trust is bigger than its direct beneficiaries. The way that we ensure that those properties are available forever for the community is through a dual ownership structure. I think the easiest way to understand this is thinking about a single family home, but of course you would do it with other things. But in the case of a single family home, you have a homeowner who purchases just the improvements, just the home, and the community land trust, as we've already said, retains ownership of the land underneath, because they never sell that, right? So you now have 2 owners in a parcel, in a property. A 99-year ground lease that is inheritable and renewable ties the improvements and the land together. And this 99-year ground lease does a couple of important things. The first thing, it sets up the rights and responsibilities of the homeowner and the rights and the responsibilities of the community land trust. Number 2, it sets out the use restrictions of the property. So again, in the case of a single family home, those could include things like the homeowner must use it as their primary residency, right, if it's a homeownership unit, or they can't have a high traffic business that's running out of their home, right, things like that. And the third thing is it sets up these perpetual affordability restrictions. So essentially, the deal of a community land trust is let's pretend that I'm a community land trust. I could approach a homeowner and say, you are unable to purchase on the market, right? You can't afford to purchase on the market. If you can, you should go out and do that. But I have an avenue into homeownership for you that is more affordable. What I'm gonna do is sell you a below market rate home. And what you are going to do in return is when you no longer want or need that home, you're going to pay the opportunity forward and sell it at a below market rate a below market rate price to the next homeowner. And when they no longer want or need that home, they're going to sell it at a below market rate price to the next homeowner. And that's going to happen again and again and again. And so all of how that works is different land trust to land trust, but all of that is included in that 99-year ground lease up front. So that home buyers really know what they are buying and that there is no kind of hidden deals, right, that would come up later. And that's where we partner with homebuyer counseling agencies and attorneys to make sure that everyone's really clear on that. So that's really the formula for how we make sure that assets remain affordable over time. We lower the price initially, and through those resale restrictions, we keep them low at sale, and that happens again and again and again. And again, that's the single-family home ownership formula, but you could kind of take that concept and apply it to other uses of land. But the other central tenet of community land trust is we say if we're making something affordable forever, we know that we can't just say that it's affordable and therefore it's true. So we stand behind those properties and homeowners to make sure that we're making good on our promises. So some of the things we steward the structure of homes to make sure if we're saying that home is going to be there in 99 years, that it should be there in 99 years. So land trust do things like if a homeowner wants to make a substantial improvement, that needs to come to the land trust for review just to make sure that it's sound construction, it meets zoning, all those sorts of things. For leaseholders or for homeowners, the Community Land Trust reviews mortgage documents pre-purchase to make sure that they are not predatory, that they're a sound, safe, affordable mortgage, as we've been talking about. Post-purchase, they can offer things like foreclosure prevention counseling and all sorts of support when you're helping a new homeowner, right, transition from renting to owning. And then we steward the subsidy as well. So the way that community land trusts make those homes affordable initially is usually with a one-time public investment. And so what we promise to whoever is making that investment is that that investment is going to go really far. It's going to serve generation after generation of income-eligible homeowner. And so we want to make sure that that subsidy stays there and that that home remains affordable. So the Community Land Trust oversees those resales to make sure that the price is accurate, that the next homeowner is income eligible, that that entire transaction is going well. And that's one of the ways that we make sure that we make good on our promises to our investors. So I was saying before our panel that the community land trusts are kind of funny because they are both innovative and they have a long track record. You don't really find things that are on both sides of that. There are about 250 community land trusts across the country. The movement really started in the 1960s. You might not think of it. It started in a farm in rural Georgia as part of the civil rights movement. And so we have community land trusts in big cities and small cities, in hot markets, in weak markets, in rural areas. We have community land trusts that are homeownership centric, that are rental centric. It kind of runs the gamut. But I often get asked the question of where are community land trusts appropriate? And I don't know how to answer that question in detail besides we've seen people do this in a lot of different places, in a lot of different contexts. And part of that is going back to that idea of community control, which is the idea that this is a flexible model that communities can adapt and flex and massage to meet their local needs. So Jane, I have a couple of slides on promises, but I can skip that and go to questions if that's, and open it up. So let's go to questions, and I can.
Okay. Questions from the public? I want to ask Rene about how is it that an ADU will help someone stay in their home?
So the best way that I can describe that is with actual people that we met. So there's a lot of homeowners have been in their homes a long time. With the market increases that have already increased, there's a lot of equity. There actually has to be a pretty high incidence of owners who don't have mortgages and a very high rate or a very low home equity lines of credit. So I'll use an example. Miguel lives in Westwood. He has lived in his home with his wife for 20 years, has a very low mortgage on his land. He is zoned to have an ADU. He is trying to put his daughter through college. He would have the ability to, if he wanted to stay in place and wanted to invest in his property, he would be able to build an ADU. It ranges on the zoning type and your lot size, but let's say 864 square feet, he could build a unit in the back, and he could use that as flexibility to provide his daughter housing while she goes to college, or he could perhaps have an aging parent live in that unit, or he could rent that, providing that as the owner, he lives in one of the units on the property. So it provides flexibility, it grows wealth in his investment that he's owned for 20 years. And honestly, a lot of the working class families in this neighborhood, you know, he had no idea what an ADU was, but very quickly said, oh, that's why some people are saying, because of your zoning, I can pay you another $50,000 for your property.
So now he can build the ADU
Yes.
and take it.
Or he can sell. I mean, that's part of, when you talk about wealth building, it is giving someone the choice to exercise, but doing so in a knowledgeable way.
Yes, sir, in the back there?
Oh.
I think that microphone up. Oh. That Priscilla.
Start close.
This is a question about the community land trust. Has there been examples of that used in more of a dense urban condition where you have a multi-story, 6, 7-story condominiumized projects?
Yes, absolutely. So some examples that come to the top of my mind, the Urban Land Conservancy here in Denver, right, identifies as a community land trust. They are on ground lease land, but it is a rental model, right, for now, so they're rental units. But cities like Seattle have condominiums, and other, Washington, D.C. and New York City have cooperatives, so multifamily ownership on community land trust land as well, yeah.
It's typically done, I believe, with a master lease that all the owners sign into. So there's one master lease with the Homeowners Association, and then everybody, market rate owners as well as affordable owners would pay into that land lease as a part of their HOA dues.
Has there been any examples of it used for senior living?
Yes, I actually believe, Eric, do you remember, I think Sawmill in Albuquerque is a community land trust that has senior housing exclusively, and then there are also plenty that through affordability, there's kind of mixed ages, but folks are doing both homeownership and rental senior housing on community land trust land too, yeah.
Ray Gallegos, Anti-Displacement Coalition. I had a question for Rene. Since West Denver has some of the same characteristics as GES, as far as like how the community's made up and economically, how have you guys been able to, one, stimulate jobs for the community there, as well as how have you guys been able to deal with community members who are undocumented or here on work visas who still would, have been here for generations and would still like to purchase homes and be homeowners here and be part of the community?
Ray, those are great questions, and really, because we're still defining the program, there's two answers to that. One is that we really haven't dealt with owners yet entering the program because we're not there. But we have talked to many community members about this idea, about what's needed. This work and all of WDRC's work plan is really based on community priorities. I will say that it is a top priority, especially you saw that builder column. It's another opportunity because there are not a lot of builders building affordable ADUs or even ADUs at all. It's an opportunity if you're going to create demand in a pipeline, that there's the opportunity to build those, fostering or working with a job program focused on construction, design, and professional services within that industry, because you really are shaping that. So those discussions have been raised, as well as access to the various components of the programs and looking at to eliminate any of those barriers, which includes, I'd be remiss if I didn't say, we are fundraising for this program right now, so if you're interested. But as a part of that funding, those sources, we will be looking at sources that give us the greatest flexibility to finance anyone seeking the program.
You guys have ideas of how you can deal with some of the residents who are, like I said, undocumented or on work visas, or been here for years?
No, just that it's been identified that we need to make sure the funders, that we have a variety of funders who can meet the needs of undocumented residents within the neighborhood. Thank you.
I'm just going to take control of the mic here since I'm the one running around the room.
Thank you. Regarding community land trusts, so in the Montbello community where I reside and represent the community, we've got a lot of elderly homeowners that would love to be able to age in place. And so it sounded like when you were earlier explaining it, that this was for new home buyers to come in. Could you explain if there is an option for folks who are already in a home to roll that asset into a community land trust, age in place, and then how does that work?
That's such a good question, and we've been talking about that a lot in GES too. So I think there are definitely avenues in for seniors and others to bring their home into the community land trust. What I do want to highlight, however, is that by bringing that home into the community land trust, they are going to be giving up some of the equity that they have built on the market, right? So for a household, for that to be a good decision for them, usually they need to be in some kind of pain. So maybe the taxes are increasing on their home and they're worried that they're not going to be able to pay the taxes, or they have deferred maintenance, or they need to refinance their mortgage and they're behind on their mortgage payments. So when we see households, whether they're seniors or others, kind of bringing those homes in, it's usually in exchange for some kind of relief that the community land trust is able to provide around decreasing their tax bills, paying back taxes, coping with deferred maintenance, especially if it's around systems, helping them to renegotiate with that lender. So whenever, especially when we're talking about vulnerable seniors, any decision like that, we want to make sure that what they're gaining from coming into the community land trust is as least as valuable as what they would be giving up in equity.
We've had an experience in our land trust where the boomers are interested. I can say that, I am one. They're tired of the steps, they're tired of the yard. We have a lot of townhomes in our inventory, so we have a pretty active baby boomer market on our waiting list because we have nothing available right now. Everything's all sold. Are just interested in a simpler life, a communal type of life. They love the diversity of our neighborhoods that we have at Lowry, within the Lowry area. It's a totally appropriate market, is the aging population, and they benefit in a lot of ways from it.
Hi, this question's for Rene. Can you expand a little bit on how you support owners in the landlord process if they do utilize an ADU?
Yeah. So, and we're not doing it yet, but it has been identified as a really critical step. So, in the same way that an owner might need mortgage counseling, and a lot of the providers of mortgage counseling have been some of the first partners to say, hey, wait a second, this is going to be an asset that, it's not only the process of designing and financing and building an ADU that's difficult. These owners need to be prepared to know what it's like to be a landlord if that's their desired path. So we see those partners providing that front end support of mortgage counseling, also working at the back end to advise. It's difficult. If anyone's ever rented a unit, there are a lot of obstacles. There's tax implications. So it's just going to be a part of the program.
Nate Schultz with Chaffa. As for you, Eric, I reached out to you recently about ADUs and financing for those. But it struck me as we were sitting here, I wonder if there's an opportunity with duty to serve on the chattel side to also incorporate ADU financing into that effort, and to be able to pool together perhaps chattel and ADUs to create more liquidity for ADU construction. Something to take back to the group working on duty to serve.
Thanks, Nate.
Diane Thiel with Denver Homeless Out Loud. Question for Beth or any of the panel members about using land conservancies for tiny homes, either our Denver example or what you've seen in other places.
I think we haven't seen a lot of tiny homes on community land trust land yet, just because they're hard to do legally, right? But one place where we are seeing this, and it's a little bit different from tiny homes that are serving homeless communities, but in Sitka, Alaska, where they are really land strapped, their community land trust is starting with essentially foundation-based tiny homes as a starter way to get people into the market. So they didn't have a lot of land, they had to build small, and the idea behind their program is to give people an avenue in, and they've actually played around with their resale formula and the wealth creation balance to try to encourage people to move to the market in just a couple of years so that they can kind of cycle families through those starter homes a little bit faster. I think there are, so that's kind of my tiny home answer. I think people are buzzing about it as you all might be buzzing about it, as ADUs are buzzing too, right? In a different way, there are also community land trusts who are seeking to serve homeless communities or the hardest to house communities in different ways too. So Champlain Housing Trust in Vermont just recently did a really neat project in collaboration with their local hospital to purchase an old motel and to convert that into transitional units. And they've actually collectively done such a good job in addressing the need for homeless and transition housing in Vermont that they're putting themselves out of business. So that motel that was once filled a couple of years ago now has a lot of vacancies, and that's actually kind of a challenge for Champlain Housing Trust on the management front. But that was possible through a really robust partnership with the local hospital, which was neat. But sorry, I moved away from tiny homes, so I don't know if anyone else would like to address tiny homes.
Hi, I'm really glad we're talking about CLTs, but I was also really hoping we could talk about housing cooperatives as one solution that has like a ton of potential for helping both the below 80% MI sector that Eric mentioned is particularly hard to work with homeownership, as well as undocumented folks and mobile communities and places where that intersects with things. Of course, it's like really successful in a lot of places, but I don't think we have anything like that I'm aware of locally. And I don't know like why that is, if we just have like a cultural hang up around thinking about communally owned housing and not just the land under it, and what we can do to make that more of a solution, or at least explore that.
To me or anyone else? Jane, you've worked with co-ops and
my very first job out of college was at a housing cooperative in St. Paul, Minnesota. That was limited equity, financed by tax-exempt bonds through the Port Authority of St. Paul, Minnesota. The river, and it proved to be highly successful. The advantage is that there's a corporation that owns it. The owners, the unit occupants have a share in that corporation that entitled them to live in that unit. Over time, it's been proven that getting share loans is not like getting a mortgage, and it's a very specific lending mechanism that has to be used. So they're a little more difficult for sustainability because of that mortgage issue. Now, there's a very successful program in New York, and I think that they've gotten to the point where they can actually provide mortgages to people. They've grown to be such a great big organization. It would take a while for that to happen in Denver, to get to that scale.
So in full disclosure, I used to work for that organization in New York City. So I do think one other piece too, just around the cooperative movement, I think it is growing and expanding for many of the, I keep hitting that, for many of the reasons that you just outlined. I do think that in the historic community land, limited equity cooperative movement, it tends to be centered in New York, DC, the Twin Cities, and San Francisco. And so lots of lending products have come out of those places that are local. And culturally, people just say, you buy a co-op and that makes sense. So I think there is some things around changing culture where co-ops aren't, and then needing to also change lending and financing in areas where co-ops are still seen as super weird. Yeah, so I think there's probably like conversations like this where we can connect, find likes, who does Denver compare itself to, and how can we make those cases that, what's going on in this community could be replicated here. And national lenders are a key part of that too, because they're the ones who can jump the markets. And
Do you want to go ahead?
I think it's important, and I think the potential is increasing. In West Denver, we've heard a little bit about informal cooperative living that is happening, and how that just naturally occurs culturally as well as intergenerationally. But interestingly enough, and not surprising, that is hurt by the rental market, which keeps forcing families to move. And so, like anything else that you don't appreciate until it starts to disappear, there's now finally a buzz about, I refer to it as social cohesion, all the threads that keep you within place, and that cooperative living and that interaction amongst neighbors. Once it starts to go away, it really starts to be missed. And so I think there really is an openness to saying, what are those models? Is there policy that can support them? Because that need does exist.
I know there's still questions. I'm so sorry, but we have to cut it off right here. They're going to be serving lunch in about 15 minutes. But I do want to say thank you very much to our panel. Let's give them a big round of applause. And I think if you still have burning questions, I think you can stalk our panelists at lunchtime. Could you wait 1 second? There's one other thing. There are opportunities to get involved in these discussions, continuing opportunities to get involved. I want to invite Sarah Showalter up from our community planning division. She's just going to give you a very brief couple of sentences about the Denver Right planning process and ways that you can participate in that, because some of these questions, particularly about ADUs, for example, are a topic of discussion in that effort. Thank you.
Thanks. Sorry, I'm sure everybody's hungry and wants to get to lunch, but we have a booth out in the foyer, so I encourage you to stop by and get some handouts so you can find out more. But the 2-second spiel is we are currently doing a major planning effort that affects the whole city of Denver. It's policy documents that affect every corner of the city. So we're doing citywide planning related to land use, transportation and mobility, and parks and recreation. And as Andrea just mentioned, there's some components of some of the topics you heard today that will overlap with what these plans are doing, particularly Blueprint Denver. There's 4 plans happening under this effort, but they're all combined together called Denver Right. And Blueprint Denver is one of the plans. That one specifically looks at our land use policy, and it's definitely already come up. We're pretty early in the process. We don't know where the recommendations are going to head, but we've already heard a lot of input about the concern around affordability as a whole is a major theme. But in particular, because it's our land use policy document, there will definitely be discussion about expanding the allowance of ADUs throughout the city. So there are some single-family neighborhoods today that have zoning that allows for ADUs, but there's also a lot that don't. And it's definitely one of the topics that come up as a tool to use to get us towards our affordability goals. We'll probably also be talking just more generally, at a very high-level policy for the whole city kind of level about concerns about affordability, displacement, and meeting affordable housing goals throughout different types of neighborhoods in Denver. So really encourage folks to get involved in that effort. Like I said, we have handouts at the Denver Right table. We have a great website. If you just Google Denver Right, spelled like we're doing this right, not like the blog that's recently been started called Denver Right with just ITE. We're actually the spelling of right, not left. If you Google that, you can find us, and there's all kinds of great information there. I'm also around if you have any questions. Thanks.